I'm Matt Beecher, and I'm at the La Quinta Resort and Club in Palm Springs for REITwise 2017, NAREIT's Law, Accounting, and Finance Conference. Joining me today is Jim Sullivan, President, Advisory and Consulting with Green Street Advisors. Jim, thanks so much for joining us.
Thanks for having me.
Now, there's been a steady stream of news coming out of the retail real estate world. A lot of it's been negative. What's going on out there, and why does retail real estate seem to be in the news every day?
Sure has been in the news, Matt. I'd point to two things. First, of course, there's e-commerce. E-commerce has just changed the way that retail gets conducted. And what we're seeing in the news today is sort of the outcome of the retailers who haven't been able to adjust their business models. They're bricks and mortar retailers, and they haven't been able to compete effectively. They haven't been able to unlock that key to how do you have bricks and mortar and online at the same time. And those are the names that we're seeing disappear. Those are the names that are being liquidated. Those are the companies that have been in the news. The other big thing is, and it's a bit more recent, is department store closing. So the department store model is definitely under duress, and we've seen a number of announced store closings. It's likely that we're going to see more. You know, retail has always been competitive. The pace at which retail is changing today, however, is just more rapid, it's faster, and that's why I think you see these names in the news almost on a daily basis.
Now, can you provide a few more specific examples or case studies of what exactly you're seeing in the retail market?
Yeah, so at Green Street, in our advisory group, probably half of the time that we're spending right now is with retailers, it's with retail real estate owners, and it's with investors in CMBS bonds that are collateralized typically by malls. With retailers, what we're trying to do is, if they own real estate, figure out if there are monetization opportunities. You own more real estate than you need for your operating business. What are your choices? What can you do with that real estate? Can you sell it to the mall owner? Can you do a sale leaseback? Can you finance it in a way that you can extract capital from your real estate and reinvest in your operating business? So we're very busy working with retailers. On the CMBS side, the difference between a mall and an apartment building, for example, is that if a mall goes dark, if it enters into what we call the death spiral, the outcome might be $100 million for that mall 10 years from now if it survives, or $5 million if it doesn't. For an apartment complex, you never see a $100 million asset worth 5 at the end of the day. 100 maybe goes to 80. So the CMBS investors are trying to figure out potential impairments in the mall business when you take some of the retailers that are closing, the department stores that are closing, figuring out which malls are going to make it and which ones aren't, are a big part of the business for us at Green Street right now.
Now, lastly, we talked about some of the negative news and sort of the glass half empty. Is there any sort of positive spin that you can provide on the retail sector?
Yeah, absolutely. Retail is facing significant headwinds, but there's some tailwinds too. You know, for example, occupancy. We have record high occupancy in the mall business. We have near record high occupancy in the strip center business. You hear that, oh, nobody shops at the mall anymore, yet occupancy levels are 94, 95%. So the occupancy story is attractive. Construction, there's no new construction of retail relative to what we've seen historically. Oversupply has always been an issue, and we don't have new construction threatening existing properties today the way that we have in the past. Store closures, we've talked about store closures. In 2016, we actually had a lot less store closures than we had in 2015. So the pace of store closures actually decelerated in 16 versus 15. So ultimately, it comes down to price. When I look at great mall companies trading at 15, 20, 25% discounts to the private market value of their assets, you really have to wonder if the public market is appropriately valuing the headwinds and the tailwinds, or has overdone it because of the headlines we talked about earlier. It's a debate that we hear every day, and it's an answer that a lot of people have a different opinion on.
Great. Jim, thank you so much for joining.
Thank you.
For more from REITwise 2017, be sure to visit NAREITsREIT.com.